Happening now, a major escalation in President Trump's trade war with Mexico and Canada.
For decades, Canada's economy was closely linked to the United States, with about 75% of Canadian exports heading south of the border. The trade relationship was vast, steady, and dependable, a cornerstone of economic policy. But that reality is shifting. As of 2025, the Canada-U.S. trade partnership is facing unprecedented strain, and the pressure is coming straight from Washington. President Donald Trump's renewed tariff campaign, more aggressive and wide-ranging than anything during his first term, is pushing the two countries toward a trade split that few expected. This time, it's not just about steel or autos, it's about everything. In March, the White House slapped a sweeping 25% tariff on all Canadian aluminum and steel, signaling a broader and more disruptive economic confrontation.
President Trump's raising tariffs on steel and aluminum imports from 25% to 50%, they're now in effect. CNN's Vanessa Yurkevich is at the Magic Wall to explain how this major increase may be passed on to consumers. Vanessa, what could be the impact caused by this doubling of those steel and aluminum tariffs?
Then came the threats. A 25% tariff on Canadian cars and auto parts.
After the president announced Wednesday the U.S. will impose a 25% tariff on imported cars and car parts.
If they're made in the United States, there's absolutely no tariff.
Then came the 10% levy on Canadian energy exports. For many companies, this wasn't just another tariff, it was the breaking point. This marks the end of the old relationship with the United States, declared Prime Minister Mark Carney during his 2025 visit to Washington. He didn't say it behind closed doors. He said it on camera, with the world watching. What happened next was a turning point. Canadian businesses began pulling away from their biggest and longest-standing customer. In British Columbia, a pharmaceutical company started building new partnerships in Asia. A costume maker slashed prices for their U.S. customers just to clear out extra inventory. And in Montreal, a steel parts supplier issued a blunt warning. Prices for American buyers were about to double, and they weren't kidding. Before we dive deeper into this economic shakeup, hit that like button to help us out with the algorithm and to show your support. Label pack printing, once heavily dependent on U.S. customers, made the tough call. They were pulling back completely from the American market. "We're stepping back," the company announced. "If Trump slaps a 50% tariff on our goods, it could wipe us out overnight." That fear, unpredictability, was echoing across the country. And that single word, unpredictability, continues to reshape Canada's economic map. Canada's leaders aren't waiting around for the next shock. They're moving fast. In late 2024, Canada sealed a major economic partnership with Indonesia, a G20 powerhouse of over 280 million people. The agreement eliminated over 90% of tariffs on Indonesian goods coming into Canada and unlocked new investment in critical minerals like nickel and bauxite. Indonesia hailed Canada as a trusted partner. Meanwhile, the U.S. was retreating, pulling out of trade alliances. Canada? It was going global. Backed by $2.3 billion, Canada's Indo-Pacific strategy is targeting 40 countries and 4 billion people. It's not just diversification, it's a hedge. A hedge against a future where Washington is no longer a stable partner. By 2023, the signals were clear. Foreign direct investment into Canada surged past $50 billion USD, a 9% jump from the previous year. In contrast, FDI into the U.S. dropped by 28%. The warning lights were flashing. "We're building predictability," said Canadian Trade Minister Mary Ng, not as a slogan, as a strategy. As Trump threatened a 10% tariff on Canadian oil, Canada quietly pushed back, targeting U.S. energy imports, presenting itself as the calm and steady hand in a storm of economic threats. Before we go on, hit that subscribe button to stay updated and to show your support for the channel. And even in the auto sector, the shift was already showing. Major automakers warned that Trump's proposed 25% tariff on cars would drive prices up by thousands of dollars.
Well, Alex Regg, there are many both foreign and domestic dealerships here along Capitol Expressway, but the auto industry is very complex these days. There are U.S. brands that are made internationally, and there are foreign brands that are made right here in the United States. So how all of this ultimately plays out remains to be seen.
Ferrari acted early, raising its U.S. prices by 10% in anticipation. Behind the scenes, rumors swirled that Honda was rethinking its $15 billion electric vehicle project in Ontario, not because of anything Canada had done, but due to mounting uncertainty south of the border. From Michigan to Missouri, U.S. business groups sounded the alarm. In public letters and press conferences, they urged Trump to pull back from the brink. 1 in 5 jobs in Michigan is tied to the auto industry, they warned. Slapping carmakers with border taxes wouldn't protect those jobs, it would destroy them. Quietly, multinational companies began redrawing their global strategies. Foxconn, the Taiwanese electronics giant, told investors it had already diversified beyond the United States. Others followed. Semiconductor firms began scouting Canadian universities for new R&D hubs. Asian and European companies announced billions in battery and critical mineral projects right on Canadian soil, because trade policy isn't just about tariffs and treaties, it's about trust. And by 2025, Canada was earning that trust. Even as the Canadian economy absorbed the initial shock of U.S. tariffs, it kept growing. In late 2024, GDP rose at a 2.6% annualized pace, better than expected. Yes, 75.9% of Canadian exports still flowed to the U.S., but that number was trending downward. Meanwhile, U.S. exports to Canada actually declined by over 1% from the year before. The economic pain in the U.S. was spreading. Retaliatory tariffs slashed demand for Florida oranges and Kentucky bourbon. Steel distributors in Pennsylvania found themselves locked out of markets they'd served for decades. Automakers began rewriting contracts to account for rising Canadian costs. The ripple effects were becoming a wave. Yet, from the White House, more threats emerged. Aides floated the idea of new levies. One spokesperson, speaking off the record, joked that Canadian businesses wouldn't need to worry about tariffs once they became our 51st state. But no one in Ottawa was laughing. Neither were investors. Neither were Canada's growing network of trade partners. As the U.S. retreated from the global stage, Canada leaned in, deepening ties with the European Union, Japan, Australia, and India. It positioned itself as a stable, rules-based economy with strong institutions and treaty-backed protections. While America stepped back, Canada stepped forward. Now, the world is watching, because when a government raises trade barriers, it doesn't just punish foreign producers, it punishes its own people. In the United States, consumers are starting to feel it. Grocery bills are creeping higher, fuel costs are rising, and the price tags on cars, once built affordably just across the border in Ontario, are jumping. Canada's largest auto workers union, Unifor, didn't mince words. They called Trump's tariffs what they believed them to be: economic sabotage, a deliberate strike against Canadian industry to boost American producers. But here's the twist. Even American producers are getting hit. The logic of protectionism is cracking, and companies are noticing. Canadian firms that once saw the U.S. as a guaranteed market are shifting course, scaling back on U.S. sales, opening offices in Berlin, Jakarta, and Dubai, not Buffalo, not Chicago. One Canadian executive put it bluntly, "We're telling our clients in America, your government has chosen to make you pay more." Some U.S. clients are walking away. Others are staying grudgingly, accepting the new price of doing business. So the question isn't whether Canada can decouple from the U.S. anymore. It's how fast can it happen. As the trade war heats up, the contrast in strategy is striking. Washington is posturing, daring, provoking. Ottawa is planning, building, insulating, not with walls, but with networks. Trade agreements, partnerships, a global firewall against volatility. Where one government builds barriers, the other is building bridges. And that message isn't being lost on the boardrooms of multinational giants, because in a world where uncertainty is the new normal, stability is the new gold. As Canada's Trade Minister Mary Ng put it, predictability is no longer optional, it's essential. And if the United States doesn't find a way to restore it soon, it may wake up to a harsh new reality, not more protected, but more alone. If you enjoyed this video, don't forget to like, subscribe, and hit the notification bell so you never miss an upload. Got thoughts, questions, or just want to say hi? Drop a comment below. We'd love to hear from you. Until next time, stay curious and take care. Thanks for watching.